Diary of Future Billionaire brings you another video on mutual funds. As it is very easy to understand, mutual funds are a mutual fund, a pool fund, are a fund actually shared by many people who put their um, money into one pool fund. And this basket of investment is managed by an expert on behalf of all those investors or people. And that manager is it's known as a fund manager. He is going to invest on behalf of all of these investors. So, what are actually the mutual funds? So, mutual fund invest in multiple assets that's decided by that expert professional known as a fund manager. He just don't want invest in one investment. He invests in stocks, in forex, in bonds, in different kind of other industries. Where these money came from, or the investors are. The investors are people like you, me, or anyone who's putting money into the mutual fund, and then everyone put their money into the same big pool of funds, and this fund is managed and invested by into different assets by the expert people. So this fund is managed by expert people, they charge a little higher um, fee compared to the index fund. So examples of mutual funds are Vanguard Total Stock Market Index Fund, Vanguard Total Bond Market Index Fund, Vanguard Target Requirement Funds, Fidelity 500 Index Fund, T. Rowe Price Blue Chip Growth, American Fund Growth, Fund of America are some of the examples of mutual fund. There are many other mutual funds as well. So the mutual funds invest in different kind of investments. They can invest in stock funds like Apple, Microsoft, maybe Tesla, maybe some other funds in the stock market. They may invest in bond funds, bonds issued by the government. They can invest in balance funds, index funds, money market funds, or different other kind of sector funds based on their experience and knowledge, where they can actually get more benefit and sell and grow our stocks and our funds to grow our money. So, what are the pros of mutual fund? Mutual funds are professionally managed. It's not a one single it's not managed by someone who don't have a knowledge of managing the funds and investment. It is professionally managed. A trained fund manager make investment decisions for you. You don't need to research individual stocks or bonds. Diversification. That's like risk spreading or reducing the risk. Your money is spread across many companies or assets. Reduce risk. Easy to buy and sell. You can invest with small amounts. Very beginner friendly. Affordable. Some funds can allow investment starting as low as 50 to $500. Highly regulated. Mutual funds in the US are regulated by the security, offering transparency and safety. Automatic reinvestment. So dividend and capital gains are automatically reinvested to grow your money. So these were the pros of mutual funds. What are the cons of mutual funds? The cons of mutual funds are management fee. The first thing is they have a little higher management fee. You pay an expense ratio. So this can range from 0.1 to 2 or even higher than 2. If the and you have to pay this money even if the fund performs poorly. You can no intraday trading. You can only buy or sell at the end of day price, not during the day like stocks. Potentially lower returns. Some actively managed funds fail to beat index funds or the market. Capital gain tax. When the fund manager buys or sells assets, you may owe taxes even if you didn't sell. Lack of control. The managers decide what to buy or sell. You cannot choose individual assets. Minimum investment requirements. Some of the funds require a bit higher investments from ranging from 1000 to 300 to start with. So these were the cons of mutual fund. Thank you for watching my video. Do comment, like and share.